Welcome back, everyone. So before I get started, I just want to prepare you on how to watch this video. I've got a lot to talk about. I think I've got 54 slides. That's a lot of slides, a lot of time. So what I want you to do is prepare and read a little about NEAR and know about NEAR before you watch this video, because it's going to be more of an intermediate level. And the second thing I want to tell you about is this is not financial advice. I'm here to entertain you, if you can't believe that. So I guess we should get started. One last thing I want to tell you is that I encourage you to stop the video and print out the slides, because I'm not going to talk about everything that's written on the slide, okay? Because it's too much to talk about. So let's get started. Deep dive into NEAR. So first of all, I like to analyze blockchains holistically. That's why I've got this nice little triangular chart here. We've got the body, mind, spirit. We want to put everything together. So the main overview for today is the crypto market. I'm going to talk about that quickly. Introduction to NEAR, very quick. The rating scorecard, which is basically the backbone of my analysis. Then it quickly on the technology. You can look at that up on your own. Trends and innovations. Remember, I have another video just on the blockchain operating system, which is basically the major innovation. And then adoption metrics and conclusion. So are we out of the crypto winter? My answer is a strong no. I think we're still in a bear market. And I'm not just talking about crypto. I'm talking about all risk assets, including high yield bonds, investment grade bonds, equities, and of course, Bitcoin and Ethereum and altcoins. And there's many reasons for that. I'm not going to go over each one. You can print this out. But the chart here is showing that the put to call ratio is very low. And that's a contrarian indicator. So when the put to call ratio is low, it means the market is not going to go up. It's going to go down. The other thing I want to talk to you about is liquidity. And this is a fundamental news. It's not just on-chain metrics or technicals or sentiment. It's fundamentals that I'm calling for a continued crypto winter. So the key fundamental factor is that there is tighter liquidity, and it's not just Fed liquidity, it's global liquidity. But just in terms of the United States, we've got to look at the reverse repos, the Treasury general account, issues going on with the House and McCarthy being kicked out, and that has to do with the next potential shutdown of government. And then we had the debt ceiling, and most importantly, we've got the Federal Reserve, which is probably still going to keep raising interest rates. And lastly, within that, the liquidity framework is the Federal Reserve balance sheet, which is exactly at $8 trillion as of October 2023. And they're going to keep lowering that. Each time the Federal Reserve lowers their balance sheet, that is equivalent to the Federal Reserve raising rates. And nobody talks about this. But when the Federal Reserve balance sheet goes down from $8 trillion to, let's say, it goes down to 4, that's an equivalent of a few percentage points increase in the Fed funds rate. And I don't know exactly what it is because we just don't know. There's no equation for that. But just know that tighter liquidity means falling stock prices, falling crypto. Speaking of falling, the NEAR price has been falling for years. And it's a bad chart any way you look at it. Technically or any which way, Bollinger Bands. So if you look at the 200-day moving average, or what you have here is a 50-day moving average. It's below the 50-day moving average. It's not doing well, and it's not doing well in terms of Bitcoin dominance. So if you take NEAR's price and divide it by Bitcoin, the chart still looks like it's going down. So just be careful. Do not catch a falling knife. I think one good area to buy near is around $1 because it's a whole number. But I think if there's a bear market, that near could easily go below $1. So just be careful, do DCA, dollar cost averaging. So buy some at $1.10, which is where it's trading at now. Buy some at $1. If it goes down to 90, buy it at 90 cents. Don't be eager to buy. This is not a bull market. Okay, the background of near, you can print this out. So I'll just talk about one or two things. I'm going to be giving you my deep dive, my rating scorecard going forward in the next few slides. What did I want to talk to you about? That Near protocol, also called Near, is a cryptocurrency blockchain with smart contract functionality. So we've got many competitors that do the same thing, obviously. And I'm going to be comparing it with some other layer ones, just so you know, and including some of my favorites or some of the more popular ones out there like Avalanche and layer 01, Polkadot, Cosmos, and of course, Solana and Ethereum. Third point, it's designed to be developer friendly and facilitate the creation of decentralized apps. And it's also interoperable with Ethereum. And they're well known for their sharding mechanism. So remember, because it's sharding, it's what you call a modular blockchain versus a monolithic blockchain like Solana. And they're based in San Francisco. And they're also based out of Switzerland, I believe, overseas. Actually, the founders, I heard, since I've gone to a few conferences, they like to work out of Europe more than San Francisco. So their strategies are, one, the Near blockchain operating system. I did a video for that. You could look in my archive. Number two, their strategy is to be a thriving, decentralized ecosystem, an open web that leads to safer and fairer and censorship-resistant digital world. And Near is where Web 2 goes to become Web 3. I'd like to describe Near as hand-holding those incumbent companies, like even centralized companies like Google and Meta and Facebook. I think it could be used to handhold those companies as they cross the chasm into Web 3. And that's the key special sauce, I should say, of Near protocol. Early backers, it has a lot of early backers. It actually has more venture capital investments compared to other layer ones because Near is a latter staged layer one. So it's not a generation one blockchain. It's a generation 2 or 3 blockchain. And if you remember, generation 2 blockchains had more venture capital money coming in and giving them seed financing. And what you're seeing here is not the Treasury. This is initial funding from the venture capital companies. And this you can find on Crunchbase. Funding. Now, this is the total funding the Treasury that's reporting on a continuing basis. It's available now. This is second quarter. The third quarter is not out yet. It should be out very soon. But they have, and I'm going to tell you the key point here, they have a huge amount of funding, almost $900 million in funding, and it's one of the top funded layer ones out there. I think the top funded out of all chains, including Dapps, is probably Uniswap. They've got like $2.5 billion, but it's all in their own token. What the Near protocol does, the smart thing they do, is that they put some of their money into fiat treasuries. That's very important. So what I'm talking about is US dollars. And I think that's very, very important that they've diversified that. And they're doing this through a DAO, decentralized autonomous organization. So they're really moving forward with their roadmap, moving forward in terms of having the chain become decentralized. And this is a good example. So again, you could look this up yourself. This is from Near's transparency transparency report for the second quarter. Again, the third quarter one is not out yet. Their ranking's kind of low. This chain, to me, if I did not know its ranking, it feels like a top 10. It feels like what I call a large cap layer 1. But in fact, it's a mid cap, and some would even say small cap. Why? Because it's ranked only 41. It's actually gone down in the rankings. And this ranking includes stablecoins, but it's ranked 41. I think it was ranked 39 a month or two ago. And comparing it with Solana, this reminds me a lot of Solana, but Solana is ranked 7, and that's up from 9 just maybe 2 months ago. So Solana is doing well. Remember, they're having a good year, but they got hit last year when one of their biggest backers, Alameda Research / FTX, got hit because of the fraud, and they're on trial as we speak. What else did I want to tell you about here? It's not supported by too many centralized exchanges, and there was a risk that Coinbase would kick them out of their exchange because Coinbase and Binance, for that matter, got sued by the Securities and Exchange Commission. How does Near Protocol work? You can look at this chart on your own. The main point is something called Doom Slug for validator nodes, and I mentioned this before, Nightshade, and we're going to talk about it later. Key performance indicators. So the ones in here, it says 1, 2, 3, and within those blocks, you could see there's green, yellow, and orange, whatever, and green. The ones that are in green are the ones they successfully completed, those milestones. The ones that are in orange are so, and the one that's in red is a no, it's a bad one. They didn't succeed. So overall, they're doing quite well. They've got a lot of delays, but one reason to their benefit, one reason they have so many delays is that they're so aggressive. They're trying to do a lot. So that's a good thing. It's okay to have delays. I mean, you don't want to be too delayed like Ethereum, but delays are not necessarily a bad thing. Look at Tesla. Tesla's has delayed everything, including more recently the Cybertruck, which is delayed for 2 years. So let's get back to Near Protocol. So I want to point to one or two things. I think the most important metrics are the monthly active accounts. They've got 1.1 million, which is a bit short of their 1.2 million goal, but that's pretty damn close. And you can read the rest of these yourself. Blockchain Trilemma. This is one of Vitalik Buterin's favorite things to look at. And I like to compare it to Solana because it's so different. So Solana, as you can see, is on the right side. They're very scalable and decentralized, but they've received a lot of criticism and FUD for security. As you know, back in, March, April of 2022, Solana had many outages. But as you know, they're working on improving those outages by upgrading with the new FireDancer client server. And Near, as you can see on the left side, is very scalable and secure, but it's not decentralized. The team of Near has 2 brilliant minds that have won awards, and they came from the infamous Y Combinator. Partnerships and collaboration. Near is known to having their whiteboard series, and they have partnered with Alibaba and I believe Google Cloud. And here in this picture, you could see them talking with my other favorite blockchain, Anatoly Yakovenko. Next, collaborations can lead to blowups. There's a lot to talk about here, so I'll just go over it quickly. They announced a partnership with Terra, and you know that blew up. And you know they were working closely with FTX, and you know that blew up. And they introduced an algorithmic stablecoin called USN, and that blew up. So that has not been good. And this did not help with the total value locked that is nothing. It's much lower compared to everyone else. But there is some good news here. If you look at the last point, on September 2023, Near partnered with KaiKai to have a new retail-centric stablecoin, and more importantly, perhaps, or maybe not, but more importantly in terms of stablecoins, they're partnered with, they're working with, I think it's Circle, to have USDC, which is the second largest stablecoin, to now be on Near. So that's really important. Speaking of important, this is really important. I'm going to have to talk about each of these points because this is basically the backbone of my my rating scorecard. So I rate Near an A. Here's why. Funding, as I mentioned, is excellent. The management team is excellent. They've won many program contest awards, and they were finalists. I mean, really unbelievable top team. I guess I could talk about it later, or maybe talk about it now since we're on the subjects. These are very left-brain people, quantitative type people. And there could be an issue there because when you're that left-brained, you may not know how to run a company or may not have that emotional intelligence and leadership skills and or marketing, and they've been pretty weak in some of those right brain areas. Technology is excellent, such as high TPS, transactions per second. Developers has historically been excellent to above average, but there's been some slowdown recently. The user experience is average, but their mission is to have a very strong user experience, and they're doing that through BOSS, the blockchain operating system. The use case is above average, and they've got their own version of Polygon, basically their own version of Layer 2. Then have something called Octopus Network and Rainbow Bridge, which facilitates interoperability with other chains, including Ethereum. Their ecosystem is below average, and I'm going to talk about that later. There aren't many Dapps, and I've never heard of most of these Dapps. As I mentioned earlier, their decentralization score is below average, and they have a hard limit, unfortunately. So I think the reason why validators have not gone up to like 1,000 is because of this technical, I should say, hard limit in the way the chain was designed. Tokenomics is above average, though on one negative factor within tokenomics is that the staking percentage is below other chains like Solana. And lastly, social and partnerships is excellent. And I mentioned the whiteboard series and Twitter, which we're going to talk about. Overview, you can look at this on your own. I would say, looking at this going over the last few quarters, or over a year, the metrics have been below average. Remember, the whole crypto industry has had weak metrics, but some of the metrics have been below average. So they're not doing well until recently. Excuse me, I'm losing my voice. And I'm going to show you that in a minute. I'm just going to focus on one area. TVL has been low, and it's gone down rapidly. NFTs sales are low, and total validators are low. And the supply stake is only in the 40% range. It should be higher. Developers, I mentioned before, has been excellent historically. And this comes from Electric Capital. They do the best report on this. And actually, you can get this in practically real time if you go on their website. But once a year, they put out this really good report. So you can see here that in the blue shading that Near has many full-time developers. And then they also rate by part-time developers. And you can see they're up there with Polygon and Internet Computer, which I don't rate well because it's centralized. And some other factors. And I think Solana is up there somewhere. I don't see them. But basically, Near is doing well in terms of developers, despite slowing down this year. So we need to monitor that. The technology, this is a little outdated, but it's not that outdated. But Well, maybe it's a few months old, but I want to show you these slides from nearwork.com because they're done so well. So you can see near here, excuse me, near here in this chart here has a very good block time of 1 second and less than 10 seconds of finality. Remember, the goal, the holy grail, is what's called instant finality. And you can see here that they're up there with Solana and I guess that's about it. But we're missing some chains here like Sui and Aptos. And there's some other ones that have pretty good finality and speed. I'm trying to think right now. I think maybe Avalanche. I don't know why they skipped those other ones. Maybe because this is L1 and Avalanche is an L0, but they do have Polkadot. Who knows? Either way, technology performance of Near is amongst the best. Speaking of validators, you can see the arrow here is pointed to the validators. Here we have 211. You can see the way it changes all the time. But you can see that near validators is low at 211 versus Solana and Avalanche and Ethereum. And the Nakamoto coefficient, it's not that bad, but it's not that good. It's 8. If you look at Solana, it's much better in terms of decentralization. And remember, decentralization isn't just about the number of validators, not even the Nakamoto coefficient. There's a lot more. And the Solana does a great job of showing, with exposure to cloud companies and diversity of validators by country. I mean, they have a whole chart on that. Actually, I have a video that explains that. So Near definitely has some work cut out for it in terms of decentralization. But right now, I'm not too worried. Out of those three factors on the Vitalik Buterin's blockchain trilemma, I'm not too worried about decentralization because it's early. I mean, Near is a new protocol, and it takes time for these chains to get scaled up. Remember, what's very important is scalability and security. But decentralization, you could build that up over time. So I wouldn't worry too much about that. Next slide. Here's another slide from Nearwig, and it compares EVMs, Ethereum Virtual Machine chains. And Aurora is Near's version of that. And I mentioned this to you earlier. So you can look at this on your own. Another slide from Nearweek is this one here on blockchain peers. And this time they're including Avalanche. And you could see a few factors. I'm going to spend like a minute on this, talking about one or two. I think what's really important is what's his development. Near supports many programming languages, and they support WASM, which is very important because WASM supports Web 2 apps. And remember, part of Near's ethos and mission is to move those Web 2 apps to Web 3. So that's why it's very important that they have WASM. And I think we discussed everything else already. The TPS is theoretically, I should say, is up to 100,000 transactions per second. And I think I'm going to skip this because most of you should know or be aware of, how fast these chains are. Use case, I mentioned this already. The use case is DeFi, which hasn't been doing well, to be honest. The other chains doing better in DeFi, like Ethereum, and Solana was doing well until it blew up in November 2022. But I think Solana could come back in that area. And there's some other chains, layer ones, that are working on DeFi. So what's important for Near is that they get the transition of Web 2 into Web 3 right with the blockchain operating system. The weakness. You remember earlier I said that these are left-brained founders, and I think they should transition to getting founders or some leaders. I'm not saying fire all the founders, but get a leader that's good at right-brain stuff, at making friends with other blockchains, with other companies, and having emotional intelligence and marketing skills. We need that because this chain has failed to generate hype. Actually, the inside joke amongst crypto founders is that the Near protocol doesn't have a marketing department. So that's how well known it is that Near has not done a good job at generating hype. Ecosystem. I want to show you this to, how do I say this? To basically hammer the point that sometimes things are not as good as they appear. The whole point is not to say, oh my God, look at all these Dapps and look how big and expansive this ecosystem is. Almost every LA1 has the same chart. The point is this. Yes, it's not as large as other blockchains, but it's even worse than that. If you get your magnifying glass and you look closely, I should say, into these Dapps, you're going to say, wait a minute, I've never heard of these Dapps. I never heard of this one. I never heard of that one. They don't have those big name Dapps that other blockchains like Ethereum and Solana have. That's the key issue. And speaking of which, the Dapp diversity is low. You can see near here, it's in gray. They only have like 2 to 3 Dapps. And if you look on the right side, it says DeFi diversity measures the number of protocols that make up the top 90% of the DeFi TVL, total value locked. So near is very concentrated compared to Ethereum, Polygon, which is basically Ethereum, and Solana and BNB and Avalanche. They're very, very dependent on a few Dapps. So that raises risk, my friends. The most popular Dapp is the sweat economy, and you can look that up on your own. You basically sweat to earn points, right? Jogging, walking, things like that. And the sweat economy has its own token, I believe. So top DeFi by TVL, and here you can see the list. It's the linear protocol, Burrow, and Metapool. So it's mostly liquid staking and DEXs and lending. So near a special sauce, I mentioned this already. It's a blockchain operating system. I'm losing my voice. And Nightshade. I want to talk to you about this. The most important factor for Near, besides, I should say, the most important mission for Near is its blockchain operating system. Now, the most important technological factor for Near is Nightshade. And this is about Near sharding. It's said to be better than other types of sharding from other blockchains due to its rapid cross-chain finality, and it's basically dynamic sharding. So Near, I mentioned already, is going to help transition corporations from Web 2 to Web 3. And the last point is that they're trying, I'm going to show you a slide on this. They're going to combine all the advantages of Web 3, but get rid of all the disadvantages of Web 2 and Web 3 companies. And there's a chart, a slide that explains that to you. It's right here. And you can go onto their website and to read about this. But that's the most important point, is that what they're doing is, again, I'm repeating myself, but it's very important I say this, is that they're getting rid of the weaknesses of Web 2 and only keeping the good things from Web 2, and the same thing Web 3, getting rid of the weaknesses such as user experience, but keeping the good things from Web 3, like not having anyone look at your personal credentials, right? Portability of those personal credentials. I'm not sure where it says that here. Maybe it's on onboarding. Yeah, I'd say it's onboarding. All right, next. Traditional adoption metrics have been flat, just like most other chains, until recently, and I'm going to talk to you about that in a minute. So this is from Artemis, and I'm comparing chains of the same size of near. So near, I should have said to you, near is in gray. So you can see that near has jumped up recently because you can see the gray line going up there. And you can see that Aptos and Solana are doing well. And Base is not here. Base is doing unbelievable. But that's like a centralized Coinbase based layer 2. And I didn't include Ethereum because Ethereum is just too big. So I was comparing near to chains of its own size, of smaller chains. So here I've got the news that, two factors. The near stablecoins, and you can see the chart here, has been low and it's been flatlined. Not good, but on the positive side, on September 15th, there was news that the second largest stablecoin company, Circle, is going to be putting its USDC on near protocols. That's a very good factor because remember, stablecoins are the lubricant for a blockchain. It sounds like it's not important. Like, why can't you use dollars? But stablecoins are really important. I like to talk about like cars. Like, you can have an autonomous car that's ICE, that uses gas, but it's much easier to have an autonomous car that's fully electric. It just works better together. The same thing with stablecoins. Blockchains work so much better, and you can increase the total value locked of a blockchain if you're using popular stablecoins like Tether and USDC. So it's very important. Next, total adoption metrics, I mentioned this already, have been declining rapidly. So they're very low in terms of TVL. Active accounts have been very low and flatlined until recently. So a company called Cosmos AI, which is valued at $500 million, and actually Near is one of the investors of Cosmos, they moved their Dapp from Stripe, which is a very hot company in San Francisco. It's a payment company. So it's very important and significant that this is happening because they're moving from Stripe, which is, as again I said, one of the hottest companies in San Francisco. They're moving from Stripe to Near. So they left Stripe completely. So what you're seeing, I think, here is a migration from Stripe to Near. So I don't think it's like an increase, an organic increase in active accounts. I think it's a transfer. So what we want to see now is that active accounts going up slowly or just being level. We don't want to see it like declining, of course. One issue I have a slight worry about is the blockchain operating system was introduced in March, but nothing's happening yet. So I think it takes some time for developers to make those new apps and transition those Web 2 companies into Web 3. Next, roadmap and governance. There's been some delays and we're moving to on-chain governance. That's good. I'm going to go fast now because I don't want to spend too much time on this. So if you go to the next slide, you can see this is Nightshade. This is very important. This is not going to take this really important upgrade of dynamic resharding is not going to take place until next year. So remember that. Tokenomics, we're going to talk about the ICO, the genesis compared to peers, the vesting schedule, supply, and inflation. So let's go quickly. Here's our allocation of the genesis tokens. So it's 1 billion tokens. And the genesis now we have 1.15. And circulating supply is 0.975, I believe. So it's pretty high. So that's 84% circulating supply out of total supply. So here you can see that Near's had a lot of insiders, I should say, which is not good. So almost as high as Solana and Blockstack. I don't even know what that is, and Flow. And it's not good because you don't want venture capitalists having too much power, for example. And also, when you have a lot of insiders, there's a lot of selling, right, according to the vesting schedule. Speaking of which, here's a 5-year circulating supply, and we're at around the 36-month point. You can see that here on the slide in the chart in under 36 months. And here it says 1 billion tokens, and we're about 1 billion tokens, I should say coins, 1 billion coins right now if you round up. Here's another way of showing the vesting schedule, and you can see that we are complete. Because this is excellent news. I never wanted to buy the Near coin because of this terrible vesting schedule that we had 2-3 years ago. The tokenomics inflation schedule, inflation's not high, but the inflation schedule is not good. I don't like it. It's like 5%, 5.5%. It doesn't really go down until the chain has like 1 billion transactions per day. I mean, that doesn't make sense. What I'm going to show you now is Solana. Now look at Solana's schedule for inflation. I like it a lot. It started very high at 8%, but it's been going down quickly. And now I think it's only around 6%. And a year from now, it's probably going to be the same or lower than Near protocols. Tokenomics is good, but the fee burn is not that good. It's not like Ethereum where the fee burning is going to make Near inflation deflationary. That ain't happening. Inflation compared to peers, you can see Near is around 5%, and it's lower than Solana's, but I said to you earlier that the Solana is going to be coming down fast. And you can see some other chains like Ethereum have like 0 inflation. ESG, I rate them high, but a third-party company called CC Data gives them a low rating of just B. So that surprised me a lot. Valuation, there's a price to book, and I must be the only person doing that. And that's not in a chart here, in Excel spreadsheet. If you look at the bottom point, it says here, Near's price to book value is amongst the lowest of layer 1 chains. It's only around 1.6 times. That, my friends, is even lower than the price to book for this S&P 500, which is around, I think it's around 2.5 to 3 times. So it's insanely low, even compared to equities. So that's incredible. And the other thing I want to point to you is the column there, that shaded column. And I want you to focus your eyes on where it's green. There's green shading. You could see that the market cap divided by active developers is lower than other blockchains. And the market cap divided by daily active addresses is extremely low at only 1.6. And this is because of the migration from Stripe to KaiKai, that Dapp, that retail Dapp, which I think I'm going to talk to you about it in a slide going forward. And lastly, the market cap divided by daily transactions is extremely low, just like Solana. So this is very important. So this is in terms of fundamental analysis, like Graham and Dodd. Remember, security analysis, Graham and Dodd. This is what a lot of CFAs like to point at. They don't care about, I should say, the stock price or anything. They're into fundamental analysis. They like to look at the balance sheets. And one way of looking at or analyzing equities is looking at discounted cash flow and looking at price to book and looking at these other metrics. And in terms of these metrics, Near scores probably number 1. So this is a place I think people should really focus on. Next, upcoming events. So this is something that's important for catalyst. So the possible catalyst is, one, that Near just partnered with the International Cricket Association. I never knew cricket was so popular, but it's like, I think it's number 2 after soccer. So you got soccer, cricket, and maybe tennis, believe it or not. I'm looking for pickleball. I think pickleball is going to be up there as a top 10. But right now, pickleball is a new, rapidly growing sport. Let's hope that NEAR works with the Pickleball Association or maybe the USTA. Speaking of catalysts, I think a good place to watch a big up move in prices is going to be November 7th through 10th. There's going to be a big conference, the NearCon conference in Lisbon. So that's something you need to watch. And if you want to look at news, I mean, you can look at Twitter, you can look at different places, but I would focus on Twitter or X. I guess we should call it X. You can look at these two. One's a local Twitter account. That's the NearSF. And one is the one on the left in green. That's the official Twitter account. And you can see the news out of Twitter, out of NEAR. Social engagement, I rate them an A. The social engagement is very high at 1.9 million Twitter followers, and it's been going up during this crypto bear market, this crypto winter. Now, that, my friends, is very high and unbelievable considering that it's doing well on a not just absolute basis, but relative basis. Again, it's doing well on a relative basis because the number of Twitter followers and social engagement has been increasing as other chains have seen decreasing or flatlined Twitter followers. And also they have Reddit subscribers and they're on other social websites. So risk, what are the major risks? I mentioned them earlier, like systemic risk, including that crypto is still correlated to the stock market. There's risk of falling liquidity, meaning interest rate risk. And then there's idiosyncratic risk. That's unique risk of this particular blockchain. I mentioned earlier dependence on VCs. Regulatory risk, because the SEC said that NEAR is a security. There's business risk, meaning competition with other layer ones, layer zeros, layer twos. There's execution risk with the Nightshade upgrade. There's market risk with the Treasury. And then lastly, there's custodial risk. So there's a lot of risk, but remember, each blockchain has risk. And I think this blockchain, even though it has risk, has lower risk compared to other blockchains that I've seen. I think this is my last slide, finally, right? Slide 54. Why do we cheer for NEAR? I think that NEAR has a possibility of pumping during the next bull run. When's the next bull run? I don't know when the next bull market is. I'm guessing it's going to be when there's higher liquidity sometime in 2024. And don't forget, around April, May, we're going to have the Bitcoin halving in April, May 2024, which is going to lower the amount of Bitcoin available to miners, which is also going to help Bitcoin. And as you know, altcoins are joined to the hip of Bitcoin. So if Bitcoin goes up, crypto in general is probably going to go up. What else did I want to tell you about? I think that, again, that this blockchain operating system is really important. And this is what's going to get NEAR on the map. So remember, the future is NEAR, and this blockchain, this project could become boss. So my friends, thank you for listening. Don't forget to smash that like button and share this with your friends. Adios and goodbye.